So you've got a hyper-engaged industry meeting what I would call hyper-unengaged consumers. When we were researching into consumer issues at the Money Advice Service and the Money and Pension Service, the lack of consumer engagement just seemed to be the number one problem. There's plenty of tools to help consumers. There's no shortage of information and guidance out there. It's getting people engaged. And I think consumers are often bored of financial services products. And if they're not bored, they're often scared of them because of their complexity. We have a whole chapter of the book called Avoid Charlatans and Sharks, because we both think that the threats to people's wealth come as much from scams and also following kind of what we call investment fast fashion as they do from making bad investments themselves.
I'm Aoife Devitt, and welcome to the 50 Faces podcast, a podcast committed to revealing the richness and diversity of the world of investment by focusing on its people and their stories. I'm joined today by Jonathan Hollow, who's a writer and commentator on consumer education and protection in the UK. His recent book, How to Fund the Life You Want, distills learning on financial education and evidence-based investing into a manual for pensions and investing. He's a charity trustee and also doing a part-time MA in ancient history. His former roles include leadership positions in the Money Advice Service and the Money and Pension Service. Welcome, Jonathan. Thanks for joining me today.
Thank you for having me.
Well, let's start with your career journey, where you started out, what you studied, and how you ended up in this world of investing.
Well, it's been, I think, as with many people, a little bit of a circuitous career journey, and I didn't necessarily intend to end up where I ended up. I grew up in Birmingham. I studied literature at university. I then had a few interesting detours. I studied in Russia for a bit, in Moscow for a year. As it happens, as you mentioned at the beginning, I'm now back at university and looking at ancient Rome and Roman Britain. So in the middle, I had a career in mostly the public sector. And I suppose a kind of theme running through it was trying to help explain to consumers or businesses how to deal with really complicated government regulations. And I suppose that connects with my degree. I've got a passion for plain English, and I worked on a very large government web project in the early noughties, which was about helping small businesses to understand what government regulations applied to them. And then about a decade later, I started working at the Money Advice Service, and that was all to do with consumer education, to do with money and pensions, really. But I'd always had a strong interest in that. Well, I say always, probably since my early 40s, I'd had a strong interest in managing your own money and understanding how to invest and understanding the pension system. So I brought a bit of passion to it, and I hope that passion has found its way into the book.
Well, it certainly explains why you wrote that book so effortlessly and speedily, it seemed, as if with a literature background. But before we dive into that, I just want to ask a few questions about your educational background, because it's interesting. I also spent time in Russia in my younger years, not as long as you did, it seems, but it actually had made quite an impact on me because it was during my formative years. What year were you there, and did you take away any kind of life lessons from the time you spent in Russia?
Yes. I was in Moscow in 1993 and 1994. So that was after the end of the Soviet Union, but in the chaos, really, of the early 1990s. I got there in early September, and 3 weeks after I arrived, there was the second military coup of that decade, with the Conservatives trying to take down Boris Yeltsin. So that was a pretty interesting experience. And yes, I've kind of fed on the experiences of that year all my life. But I guess one of the things that really came over to me incredibly strongly is what a positive force the rule of law is, and particularly property law, in establishing a society. Because what was going on in Moscow at that time was property rights were all over the place. Nobody knew who owned what, and it was really the law of the jungle. And we don't really notice laws like that when they function correctly in our societies. It's only when you go somewhere where it's broken apart that you really see it as a positive force for good.
So interesting. Well, I was in Russia at the same time, 1993, but only at the September, October timeframe. So I'm sorry we didn't know each other then. I'm sure we would have made martial law a little more enjoyable if we'd been able to hang out, but really interesting insights. And then the interest in ancient history. What frame of reference maybe are you kind of getting into ancient history, given you've seen the machinations of government now in the modern era? Do you get any insights into that, understanding that now that you're looking at ancient history?
Well, I think anybody who looks at Rome, and Rome is my fascination, is the big question about the Roman Empire is why did it end under the circumstances that it ended? And are there any lessons for today? And I wouldn't venture any answers to that now. I'm far too early on in my journey, but I think that's at the back of the mind of anybody who looks at that era. What I'm looking at the moment is the use of silver in the late Roman Empire. And there's this interesting phenomenon that the silver dishes that have been found, which are usually in abandoned treasure hoards at the edges of the empire, over a period of about 150 years, got bigger and bigger and bigger and heavier and heavier and heavier. And there's a big question about whether that was ostentatious display and indicative of a widening gap between rich and poor. And obviously that question echoes down the years to us today.
Well, I'm looking forward to the next book, drawing together those similarities. It seems really fascinating, which brings us actually nicely to today's book and the themes there and the inequities, perhaps, the lack of transparency, lack of information, the need for bridging that gap. What are some of the themes you cycle through in the book, which is called How to Fund the Life You Want? So obviously deemed to address that. And maybe can you just take us through some of the topics?
Yeah. So the subtitle is What Everyone Needs to Know About Savings, Pensions and Investments. And I suppose the sequence of the book is, it very much starts with life, not money. We're encouraging people throughout the book based on evidence. So we've looked at the peer-reviewed academic evidence. In the first chapters of the book, we're looking at the evidence about what makes people happy. And money is not really the thing that makes people happy. Actually, it's relationships, it's connections with other people, it's shared experiences. And when people look ahead to their later life, when they're either not working anymore or winding down work or doing a different type of work, we try to help them to form a vision, a strong vision of what that life will look like and feel like. And that's really the starting point for them then thinking through their own financial plan. So the thinking after that is, well, if you want that future life, how much money will you need to sustain it? If you want that much money to sustain it, what are the sources that you've got? For example, in the UK, you can count on a certain amount of money probably from the state pension. Some people might have a little bit of defined benefit pensions, but most people are going to have to invest and rely on an investment-based pension. So we walk them through the logic of how they think about what we call the size of their financial mountain. How much money do they need to have at the summit of that mountain? And then once they've reached that summit, they can start making their way down again and decumulating that money. And then we talk about the evidence behind the fundamental principles of successful investing, and particularly the evidence that index investing or passive investing is a much more reliable and successful route to building your mountain of money than active investing. And then we talk about the kind of behavioral challenges, because actually these principles of how to invest are really simple, but the emotions people feel and the behavioral challenges they face as markets rise and fall are really considerable. So we talk about human behavior, and then we end up with this question of what we call a financial bodyguard. Do you need a financial advisor permanently in your life to help you with your own behaviors? Or do you judge that you're actually able to manage most of your money for most of the time? And in which case you may need a financial advisor for specific purposes at specific times. So we end having hopefully educated the reader about the kinds of topics that any good financial advisor would advise on. We end by saying, here's how to choose a really good one for your purposes and means. And alongside all that, we give a downloadable workbook. So each chapter is very practical. And the idea is people can download this workbook and apply this evidence and these lessons to their own circumstances.
So interesting. And it really touches on what I think is a bit of a trend now, or a wave, maybe more than a trend, a movement away from goals-based financial planning into mission-based or purpose-based financial planning. And I guess what you mentioned there before about one's purpose and what makes you content and gives you fulfillment is a key question to answer. And would you say when it comes to the first rate advisor, which I think was probably for me the most fascinating end to a book, any kind of key attributes that you see?
Well, a key attribute from the point of view of myself and my co-author, Robin Powell, is you need to find a financial advisor who is evidence-based. We don't think the evidence supports the idea that active managers, fund managers, or financial advisors picking funds are going to be able to pick winners over the long term. So we advocate, as I said, index investing, not trading frequently. And that goes against the grain of what many financial advisors naturally feel they should be selling. They should be selling activity rather than passivity. So I think finding an advisor who really keeps up to date with the evidence is a very important thing. And then I would say probably the second most important thing is finding an advisor who's really aware of the behavioral susceptibilities of human beings and their own behavioral biases and weaknesses, because they're all human, they're not robots. So you need an advisor who isn't going to react to changing markets in an ill-considered way, because you're paying for somebody to be better at that than you are.
And of course, Robin Powell was a guest on this podcast series, and we did discuss his evidence-based investor blog as well as his position on active versus passive. So I'll put a note to that on the show notes, and thank you for reminding us. But now when it comes to the gap in financial education and say just general consumer knowledge, especially around complex issues like pensions, why do you think we're so far behind still? It doesn't feel like we've made much progress over the course of, say, the last 2-3 decades.
Yes, I mean, you put this question to me in advance, and I thought that's such a good question. And I really thought about it a lot. And the best way I can sum up my response to it is I think it's a really wicked problem because there are so many different components to it. I think you've got what I would call a hyper-engaged financial services industry. There's a lot of money to be made out of selling financial services products to consumers, and the industry is very good at it, and in the City of London is particularly specialized in it. We react to market news. We have this fear of loss that overpowers our reason when we think about potential upsides and gains. And then certainly in the United Kingdom, I think there's a considerable degree still of social embarrassment talking about one's own money. I mean, it's interesting. We were on a radio interview to promote the book a couple of weeks ago, and I talked about the problem of people not talking about money. And the presenter said, well, we're talking about money all the time. And of course, actually, right now, he's correct. But we're really talking about the economy rather than our own money, how much money we have to live on, we want to live on, what our financial plans are for our retirement. If more people started talking about that, I think that would begin to break a bit of the logjam. But I do think it's an extraordinarily difficult problem. And it's an interesting experience. I've really enjoyed writing a book. I think there is a market for books still, but clearly many people don't read books anymore. But actually, the experience of writing the book made me think it's a really good format for helping people with this problem of the pensions puzzle, because in the space of about 250 or so pages, you really can go into enough detail to tackle the complexity, but you don't have to write 10 volumes. It's not 5,000 pages long or anything like that. So I'm hoping that for some people, this will help them engage.
So it's really interesting, that point of lack of engagement, because clearly people's time, their attention span is lower. Maybe if you can make that audiobook, start reading it out, or at least have video multimedia deliveries, maybe that's a way to get the point across. But of course, I think as you may have said, or some other wise sage may have said, it's often the things that are important are not always interesting, and the things that are interesting are not always important. So unfortunately, the cryptocurrencies and things like that, or active management, which may be more interesting, may not only be not important, they may also be quite dangerous. So it is, I suppose, a cautionary tale.
Absolutely true. Yes, I mean, there is an audiobook. Bloomsbury were quite keen to create an audiobook, so that exists. That may give other people an inroad into it. But I think your more general point about engagement and stories is quite interesting because that's one of the things we home in on. We have a whole chapter of the book called Avoid Charlatans and Sharks because we both think that the threats to people's wealth come as much from scams and also following kind of what we call investment fast fashion as they do from making bad investments themselves. So we talk about the typology of the kind of major scams that are floating around, although you can never predict what the new one will be. But we also talk about this need that humans have to have a narrative. And so when the money sections of the newspapers are writing stories, they love to find heroes and villains. And active managers, great fund managers tend to be fashionable heroes, and then they fail and they're cast out, and then new heroes have to be found. So we do warn people against what we call the narrative fallacy. That said, people have said that the book itself is not dull at all. It is very readable. And we did introduce some sections of our own, some from me and some from Robin, where we were just talking about our own life stories and life lessons in learning about money, which I think people have said helps to kind of bridge the more technical sections of the book and keep it at a reasonable level of emotional intimacy.
I really like those sections. I found them very relatable. And the one area I think it might be worth almost having a kind of updated blog is on the area of scams. Because as you know, the scammers or the sharks and charlatans, as you call them, are moving faster than we can catch up, a bit like cybersecurity. And in particular, when it comes to whether it be mobile phone correspondence, I had one case of somebody who's not that elderly, actually, communicating with somebody for 2 weeks, thinking it was their daughter, and ultimately sending an amount of money to that person. But basically, the scamming is so authentic that it is quite deceptive.
Some of these things are truly horrible. And I mean, which in the UK have an email alert, well, an email newsletter in effect that describes the latest types of scams. And I do subscribe to it and I look through it, but it's exhausting. There are just so many. I mean, the best advice we could come up with in the book is this principle of just keep on talking to people, especially if anything you're doing is involving a large sum of money. Part of the problem with scams is people get into a situation where the scammer is telling them, don't tell anybody else about this for whatever secret reason. And exposure to the light of other people's thinking is probably the best remedy for it, although not perfect by any means.
And of course, then there's the shame or embarrassment that comes with falling for a scammer,
Oh, yes.
which prevents people from disclosing it or telling people about it. And then, of course, these things continue. So a big, big problem there. And I think there are other areas that are similarly neglected or poorly understood that you haven't had a chance to cover in the book, say in the consumer education, finance, banking area.
Well, we've made it a book about working towards your future life. So what we haven't covered particularly is what I would call too much of the kind of present day consumer problems or issues with money, such as choosing the best mortgage, choosing the right type of home insurance or travel insurance. And you can imagine that if you start thinking down that route and try and make it not only the manual for the future life, but the manual for the current life, you could almost keep on going forever. You go into the benefits system, for example, outside of the state pension. So we did trim a lot of that stuff out of our thinking. We have a chapter called Manage Your Money, which is really about giving people who may not be budgeting their money a system so that they can squeeze the maximum value out of every pound that they get of their salary. But we didn't want to double the length of the book and make it the money saving expert in print as well.
Absolutely. Well, thank you for your service and contributing this to the literature. Another part of the book that I found fascinating was some of the difference in outcomes between men and women. And this, I suppose, touches so many areas, whether it be just general gender pay gap, lower pension values accruing to women, maybe fewer women in financial services and the advice giving business, And I'd love to hear what you discovered in your research about this.
Yeah, I'm really passionate about this. I was invited by the chief executive of the Chartered Institute of Insurance in London to join a project that they were running called Insuring Women's Futures. And this was in 2019. And the nub of that project really was to look at the evidence about the different financial outcomes between women and men and to start to think about what could be done about them. And she asked me to chair one of the subcommittees. And my immediate reaction was, but I'm a man. Surely all the committees on this should be chaired by women. And Sian said to me, no, men are part of the problem. They've definitely got to be part of the solution. So I took that as permission to go into this space and found out a lot of stuff about it as a result, which was pretty terrifying. In the UK, the average pension pot belonging to a 65-year-old woman is £35,800. That's about 1/5 of the average pot for a man of the same age. I mean, that is a absolutely catastrophic disparity. I should say that is obviously a snapshot of what has happened to generations who were in work for many decades up to now, and the financial differences between women and men of younger generations do seem to be narrowing, but obviously narrowing from a point of dreadful disparity. So it's all incredibly alarming. And I do think one of the biggest factors is the gender pay gap. But I also think that if that suddenly closed up tomorrow, I still think there would be enough stuff going on that is not helpful to closing the gap between women and men. A lot of it is to do with things like pensions and divorce. So when divorces take place, often the pension stays with the man, the house goes to the woman, but actually the pension may be a lot more valuable than the share that the woman gets. I think the sort of male-dominated nature of the financial services industry is still a matter of concern, although I should say, through this project, I met some fantastic and visionary women business leaders in the City of London. So I came away with a very strong passion about this, and we made sure that our drafts of the book were read by as many women in the target audience as we could possibly get. And we have a section in the book that talks about some things that are very specific to women's circumstances with, for example, maternity and divorce. But obviously, generally, the evidence in the book and the rules and structures in the book apply equally to women and men. And our hope was that we'd written something that just works for everyone. And the initial responses from the women readers of the book has been very, very favourable. So I'm less embarrassed, although it's not perfect, that you've got a book written by two blokes talking about the financial differences between women and men and trying to make their book work better and better for women. I hope it'll go through a second edition. And if there are any women readers of the book as a result of your podcast, I'd love to hear from them about what worked and didn't work for them.
Well, again, a very important issue to highlight and amplify. So thank you. So let's just go back to some personal reflections. So you've had quite a varied career. Were there any key people there who influenced you and how you think about some of these issues or life in general?
I'll tell you one interesting story. I had a really good boss it's probably nearly 20 years ago. And we were working in a service where the client was asking us to provide more innovation. And he asked me if I would be the innovation leader for that service. And he said to me, I want you to learn about this. And I always think that when you're trying to learn something new in business, what you should do is try to find the very best person in the world and learn from them. And that struck me as an incredibly ambitious and tremendously visionary thing to say. And I didn't really know how to even deal with it when he first mentioned it. But he was true to his word. He did a lot of research and he found an innovation leader based in the United States who I think was a remarkably talented individual. And if I remember correctly, at that time, this chap's day rate was around $12,000 a day. And this was nearly 20 years ago. And my boss paid for a couple of days of his time to come over and teach us what he knew, which was a very interesting topic, which was about how to run innovation through a systematic process rather than leaving it to luck or chance. So I always taken that away as one of the most interesting perspectives on business and learning I've had throughout my career. And I would note, by the way, that my co-author Robin, even though we've never particularly discussed that perspective, he keeps on picking up Nobel laureates for interview. He's interviewed so many Nobel laureates in economics and actually some Nobel Peace Prize winners as well. So he seems to put that into practice quite instinctively.
That's fascinating because as you mentioned that, I'm thinking, yes, the best person in the world, but I've just lived a life where I've been a little bit let down at times by so-called experts. That I'm sure that process, and I can only imagine that you and Robin bring a huge amount of skepticism to the table because you are aware of sharks and charlatans. Any expert, I suppose, their so-called expertise. But I do think there's a certain allure in thinking that there is someone out there who could really be worth that kind of a day rate. So I guess I'll keep looking. But very interesting. And well, you filled this with a lot of advice, the book, and I'm sure you've throughout your career come across lots of great gems of wisdom. Was there anything that particular resonated with you, or maybe that when you were compiling in the book the various pieces of advice sort of surprised you that you thought maybe wasn't common knowledge or is a little bit counterintuitive, or anything else that you can share?
I don't suppose there's much in the book that is terribly counterintuitive, really. A lot of this stuff, unfortunately, we already know. I mean, if I think about my own life, and maybe one of the things that makes me a bit more of a credible author for this book is I wasn't really very engaged with pensions myself and planning for my future life until I was about the age of 40. So I started pretty late. If I had to go back and advise my earlier self, I'd be saying start putting small amounts of money aside into a pension fund, into an investment fund from your early 20s. What I would definitely say to that younger person, and I've said it to plenty of young people now, is I'm a great believer in small cap index funds because the long-term rate of return on small caps above inflation seems to be in excess of 8 or 9%. And they're very volatile, but you can afford that volatility if you start doing that kind of thing in your 20s. So I would say that would be something I would definitely look back on and say to my younger self, that's what you should have done.
So interesting. Well, thank you so much, Jonathan. This is a scary area. I think it's complex. And for that reason, a head in the sand is often a comfortable place for many consumers to remain. And you have shone a light on some of these areas in a very relatable and personable way. So I think you and Robin have done a great service to the consumer through this book. And I wish you the very best with its launch and hope that through this podcast, we can do some part in amplifying it. So thank you for coming here and for sharing your insights with us.
Well, I do appreciate that. I should probably end by just saying again that the title of the book, How to Fund the Life You Want, it's available from Bloomsbury. It's in paperback, ebook and audiobook. So I hope one of those formats will tickle the fancy of some of your listeners.
Indeed, and we'll have links to that in the show notes. I'm Aoife Devitt. Thank you for listening to the 50 Faces podcast. If you liked what you heard and would like to tune in to hear more inspiring investors and their personal journeys, please subscribe on Apple Podcasts or wherever you get your podcasts.
This podcast is for informational purposes only and should not be construed as investment advice, and all views are personal and should not be attributed to the organisations and affiliations of the host or any guest.